Sudip Bandyopadhyay joins us. Let's take our conversation forward. Sudip, Adani Group of stocks, what's your assessment? Worst behind us and best yet to come?
Well, Nikunj, I've been maintaining my view since even when this Hindenburg issue came up that there are companies in the group which are fundamentally very strong, and leave aside the daily fluctuations or the buying, speculative buying or selling. I think these fundamentally strong companies aligned with the Indian economy will continue to do well. I would like to highlight, the Adani ports, which has been talked about again and again, and I think I have spoken about it in your channel multiple times. I think, import and export is very closely aligned with a country's economy. Now, if assumption is Indian economy will continue to grow and we will become a $5 trillion economy, I think the port, and particularly Adani Port, which handles a significant part of India's imports and exports, will do well. So considering these facts, for a long-term investor, Adani Port does make tremendous sense. I will say the same thing for both Gujarat Ambuja as well as ACC. They are very well diversified cement companies, efficient, debottlenecking is happening. And considering the capital expenditure plan which the central government has outlined in the budget, current year's budget, I think the opportunity for growth through spending on infrastructure and other construction projects is huge, and ACC and Ambuja both will benefit. The last company I will mention is Adani Wilmar. I am bullish on this company. There are challenges in the short term with edible oil market being what it is, and they are one of the big players there. But the company can become an FMCG player, and I think they will be attempting to do that. For an aggressive investor, Adani Wilmar also for a long term is a good bet.
Well, Adani Wilmar, it's just one of those businesses which went absolutely, the stock went crazy after the IPO. Then when the chaos happened, it came just downward spiral. Now it seems to be settled. The 5% limit's gone to 10. But Adani Port is where the casualty was the lowest and the upside has been the highest. And then it's Ambuja and ACC, where again, they've got a history and they're in cement, they were operating cash flows. So they were never punished also that hard to be, to be very frank. Sudip, which one will you buy then? Adani or Adani Wilmar or Ambuja if you have to buy one?
I think I like to play safe. I'll buy Ambuja.
Okay. Naresh, how are the charts looking for Ambuja? Do you think it could go back to levels of 500 easily?
So yes, that is where the problem is, 480, 500, which is where the fall started from. This has been a stock which I've recommended along, but at 430, 440, the risk reward is not great, wherein there is 10% upside and 10% downside. But yes, technically the last 2 days has been a short-term breakout. It could test 480, 500 levels, but at 480 levels, you want to be booking profits, not to be playing a trade for that.
Let's also mark some of the stocks which are moving on high price volume action. Cera Sanitaryware has hit an all-time high today. It's been forming higher lows for 18 consecutive sessions. You also have Balkrishna Industries in focus, which has hit a 9-month high on an intraday basis. The volumes too at 3 times the 20-day average. Divi Slab in the meantime has surpassed the 200-day moving average and the volumes at 2 times the 20-day average as well. In fact, talking about all of these buzzers, we have a dealer check also lined up for you, and we'll get our colleague Shara joining us shortly for that. But ahead of that, Kunal, any of these names that you would want to recommend? Cera Sanitaryware, Balkrishna Industries, Divi Slab?
So Divi Slab is interesting. I think that stock has come back above its 200 DMA, good price volume breakout for Divi Slab, and almost like a V-shaped recovery. 3 days back, the stock was beaten down back towards the 3000 levels, and that too, I think 2 days or 3 days of sharp correction led to that kind of a price tick for Divi Slab. And in the next subsequent couple of days, the stock is back above the 3300 levels, which means it's a sharp reaction on the upside, and there is a good demand for the stock at the 3000 levels. So that should now act as a good base or a support for Divi Slab, and going forward, we can expect a steady uptrend to continue. So there are a lot of large cap pharma names which are actually looking much stronger than they were maybe 6 months back. Balkrishna Industries is also another stock from the entire sector. The entire tire sector looks very interesting. So it's the likes of Polar Tires, which is the first preference from the tire pack, which looks very attractive at 370 odd levels. JK Tire, after a mild correction, I think today the stock was making a comeback for itself. Balkrishna Industries has managed to come back, second or third consecutive day of uptick for Balkrishna Industries. So that's also looking attractive. But I would probably prefer Apollo Tyres as a much more stronger bet from the tire pack.
Okay, that's of course Balakrishna holding out very well. The intriguing rebound is actually in Aditya Birla Fashions, irrespective of the disappointing numbers and that one-time adjustment. That stock tanked yesterday, and today it's seeing actually a marked recovery coming in. It's back to those 195 odd levels. Sudeep, a tough choice between Trent and Aditya Birla Fashions, or you think Trent is still a clear winner, irrespective of the valuations it trades at?
Well, I think, I will agree with that assessment of yours. I will go with Trent. Aditya Birla Fashion has been trying to do a lot of things, and that's the reason we see, displayed in the results. The top line has grown, but the margin is under significant pressure. They are trying to get into a whole lot of segments and areas, which is leading to this margin loss. Whereas if you look at Trent, I think they have established the lower end segment as well, reasonably well. That also has led to some margin compromise as far as Trent is concerned. But I think they are in a much better position to pick up from here on. And yes, the valuation remains steep for Trent, but for a long-term investor, I think considering the India growth story, considering what they're doing with their lower priced model, I would still go with Trent.
Okay, that's Trent, the clear choice there. The stock holding up about, I don't know if I was mistaken whether that's today's move, 13%. No, today it's tempered. I think that was a more longer duration chart that we were highlighting earlier, 1501 on Trent. But Kanan, you've liked ABFRL in the past, right, to trade?
Yeah, ABFRL looks attractive. In fact, I think last week or so I was actually flagging off that the stock is showing all those classic ingredients of actually bottom formation at the sub 200 levels. So even today, for example, the stock has seen some very, very strong volumes both on the F&O as well as on the cash side. You look at the volumes in the last 7 or 8 days, 10 days to be precise, for ABFRL, and the average volumes over the last 10 days has been almost 3x to 4x the volumes over the last many months for the stock, which means that the fall for the stock or the pace of fall is arrested. The stock is seeing consistent demand sub the 200 levels, and I think it could just be a matter of time that the stock could see a sharp reversal on the upside. The additional part on the technical front for ABFRL is the spotting of bullish RSI divergence. So the prices have made a new low or a swing low relative to the last week low, I think closer to 204 for ABFRL, but the RSI has actually made a higher low for itself. So that indicates that we are at a cusp of a strong bottom formation for ABFRL. So for traders who have a 6-month, 1-year kind of a time horizon, it makes a lot of sense to buy the stock at current levels.
Sudeep, if you had to take a pick in the mid-tier banking names, what would be your top bet? All of those AU Small Finance Bank, IDFC Bank, etc. Anything that stands out to you?
Well, IDFC Bank any day. I think they are doing all the right things. This has gone through a major upheaval because of the quality of the assets of the IDFC Limited, which came in. Also, it took some time for the management to stabilize the book, which they inherited once the capital first came in the fold. So overall, I think they have been focusing on CASA in a big way. They're offering slightly higher interest rate to have the liability side of the balance sheet absolutely right. And we strongly believe that the future winners in this BFSI space will be the ones which have a better liability profile and a stronger liability spread. Considering this and considering also the tech enablement which they have, of course they have an advantage having started later. I think IDFC Bank would be my choice from a long-term point of view. I think it's still a great opportunity for investors to buy into this bank for a 1-year hold.
Why is SBI suddenly underperforming? It's got everything going for it in terms of a bank, in terms of a macro tailwind, in terms of NPA. But the stock in last 6 months has given no returns.
Nikunj, is that for me?
That's right, Sudip.
Well, I think think these things do happen in market, and we have seen this getting played out again and again. SBI definitely has got the tailwind. They're doing well. Asset quality has remarkably improved, and the loan growth is also there. We do believe when the chairman came and clarified on the the fears of the market regarding the probable changes which RBI will bring in terms of estimated credit loss, ECL system of provisioning for bad loans. I think the chairman clarified that they are fully cognizant of that, and they should be good even if ECL comes, though it's a distant thing. I would worry about some of the other PSU banks, not SBI, even if ECL is a reality. But I think market was a bit worried about the ECL thing for the PSU bank segment as a whole. But as far as SBI is concerned, I think these lull period or the dips are an opportunity for investors to accumulate. There's fundamentally nothing wrong. They're doing the right things. Also, I must point out that there is significant value in the subsidiaries of SBI, which they will have an opportunity of unlocking periodically over the next 5-10 years.
There are earnings which are expected from LIC as well as Nykaa would be coming out with its numbers. Sudip, Nykaa has been one of those stocks from this new age listing that hasn't performed at all. We have seen a bit of a bounce back in Paytm, Zomato, etc. But Nykaa has been languishing at lower levels. What's your take?
Well, I think I will wait and watch. Not that I am I don't like the Nykaa business model. I think they're trying to do a whole lot of things, and probably in the long run things will work out. At least they're showing initial signs of that. But I think I'll wait and watch. There are two companies out of this entire new era companies which came with IPO 1.5-2 years back. One is Nykaa, the other is Delivery. I like both because their businesses are not something which is new or new age. Yeah, they have a different delivery model, but the businesses are age old. Delivery does transport goods from one part of the country or the world to the another. Nykaa, provides fast fashion and fast, the beauty products. Now, these have been age-old fashions. There is nothing new about it. The efficiency and the delivery model may be different. So my view is these two businesses will work in the long run. Whether the current valuation is right or wrong, I'm not sure. So I'll wait and watch. Whereas the other businesses, whether it's in a Paytm or Zomato, are new, untried, untested businesses where the models are yet to stabilize and we don't know where it will end. So I advise investors to stay away from Paytm, Zomato even now, whereas Nykaa and Delivery, I keep watching and trying to figure out when would be the right time to enter.
So Sudip, leave us with anything where you find value and you think any stocks that could be bought at the current levels?
I think cement, Aisha, looks good, and I can talk about Birla Corporation. I think we saw the results. There are tremendous opportunity at current valuation. They are expanding in Maharashtra, and once their Maharashtra capacity comes into the play, I think they will have a significant margin bump up. So Birla Corporation in the cement is what I like. And of course, there's perennial favorite Larsen and Toubro. There is a significant tailwind behind that company, and it should get into a different orbit altogether over a period of time. So if you are a patient investor, do buy Larsen and Toubro. If you want to play the cement story, buy Birla Corporation.
Since you talked about Siemens stocks for a second, I thought you were mentioning Siemens, the stock which was under pressure yesterday. Any thoughts there as well, Sudip?
The confusion with these multinational companies is they keep selling, some parts of the businesses to the holding company, foreign parent, and that creates a lot of confusion in the market. Well, honestly, I really don't know what the intention is. Fundamentally, both ABB and Siemens should do well considering the tailwind they have now on the economy after a long time. We see cap goods sector picking up, and I believe Siemens will do well. But this part of the business, selling businesses to the parent company intermittently is something which confuses the market and makes the market nervous.
Right. Okay, Sudeep, great to have you on the show. We'll let you go on that note.